Good afternoon, everyone. In today's video, I'd like to talk about some of the abnormalities that we're seeing with the market internals, especially as we get closer and closer to election day. Now we're just 24 hours away from it, but I do imagine that we're going to see a few more false signals than I think we're used to. Now, let me start off by first painting the picture of what the cumulative tick is. All the cumulative tick does is it really just starts to keep an cumulative count of the market internals. This is the NYSE tick. There's a free version of this tutorial as well, which is linked right here. You should see it as part of this video. But outside of that, the cumulative tick really helps us just try and figure out what is the market telling us. Is there more buying pressure? Is there more selling pressure? And it's very hard to lie about that. So the fact that we saw false signals here, I think really calls out to the sort of election volatility, election uncertainty, as well as election funkiness, really, for the lack of a better word, that we're seeing. Now today we saw a likely trending up move, which really didn't pan out the way we expect. But before I discuss that, I thought it was interesting to call out what a typically positive signal here looks like. So if I come all the way back here, you'll notice this is a 1 minute 10-day chart. This is 10/20, 2020. We had a likely trending up move. That happened at 7 a.m. Pacific. That's when we got the signal. From that point, you'll see the S&P really chopped around sideways, drifted down lower just a bit before we then saw a pretty nice rally where price action did break above that 7 a.m. price that we're really accustomed to seeing, right? So I would call this a winning signal in which the likely trending up notification actually gave you some sort of a heads up of what you should expect from price action, and any dips were opportunities to buy. Now we keep going forward here. You'll notice that we then had a likely trending down notification. I believe the first one was last Monday, right? So this was the first opportunity where, again, 7 a.m. Pacific, we had our likely trending down notification plotting, chopped around sideways. And then for those that at least remember Monday's trading activity, really just consistently had a good amount of selling pressure for much of the day, right? To the point where even into the close, you had a likely trend exhaustion. Now keep coming forward to Wednesday's activity here. Again, Wednesday gave you another likely trending down move where by 7 a.m. Pacific, we need to expect at least a likely trending down day based off of the market internals, which again, very hard to lie about those. Chopped around sideways here towards our volatility box edge for a bit, and then continue to fall down for really much of the rest of the day here, where if you just draw this out as a line in the sand, the 7 a.m. line where price action was, price action closed well below it, or at least touched well below it, right? In Monday and Tuesday's case, you closed below it. In the previous example of the likely trending up, you still touched above it. Now you come into today's action here, where we had a likely trending up notification. Now we draw that same line out in the sand here. This is that 7 a.m. mark. Now from that 7 a.m. mark, you touched above it, but that was really only for a split second before you then saw price action for much of the day continue to drift down lower, where we ended up closing well inside of that 7 a.m. line. Now, all this to say, the market internals today were painting a different picture from what price action was painting. Market internals told us that, hey, there was a consistent amount of buying pressure in the S&P futures, S&P market, NYSE, however you want to look at it. However, price action was telling us that there was a good amount of selling off here, where for really after that 7:30 a.m. mark, from 7:30 onwards, you saw all the way down to that 10 to 11 a.m. Pacific hour, we saw really a good amount of selling pressure. And then from that point, we saw a little bit of buying pressure come into the close here, but even that buying pressure wasn't really able to take us above that 7 a.m. mark, which I think should just indicate some of the funkiness that we're seeing with the markets. All this to say, I think the election volatility here will give some false signals, especially with things like our market internals here, where the market internals tell a different story and the volatility box instead is just really capturing each side's price action moves, trying to at least put some sort of a barrier around the volatility that we're seeing to try and take advantage of that volatility. All right, now before we conclude this video, if we take a look to see what volatility looked like today with the S&P in particular with our futures models, we started off with our scalper volatility box model. By 7 a.m., we knew we should be on the aggressive model. And then really by 9, the edge of the 10-hour mark, we knew that instead of the aggressive model, we should really be on our conservative model. So if you take a look up here, I think this is going to do a better job of painting the picture. The S&P from our most aggressive volatility box model was really one step away from our most conservative model, which is our Doomsday Conservative model. And really, to use the Doomsday Conservative as a note to close this video out on, the Doomsday Conservative is what I imagine tomorrow night with election night is going to be the one that really helps us try and catch any of the fade opportunities we have in the S&P and really take advantage of any of those fade opportunities and the volatility I expect we'll see headed into the evening, especially when we have some of the broadcasts updating, a lot of news press releases, just news events, news headlines hitting the market. That's going to bring a good amount of volatility. That good amount of volatility, I imagine, is going to be translated with breach opportunities using the Doomsday Conservative models. I would really stay away from scalper in the after hours activity tomorrow. Same with the aggressive. The Doomsday aggressive would really be the most aggressive way to try and participate, with really a focus on the conservative along with the Doomsday Conservative for after hours activity. All right, hope this video helps. We'll see you in the next update. Take care, everyone. Good luck trading election night, and we'll see you in the next update.